Good morning, everyone. Happy Thanksgiving. Hope you will have a wonderful holiday with your family and friends. Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Markets, what history told us to expect. The S&P bounced nicely this week. Over the last 25 years, the index has been up 75% of the time during Thanksgiving week. And yesterday was a perfect support at the 100-day moving average. These are areas that we look at as critical to really buy on weakness at Rezny Wealth. Classic month-end window dressing by the big Wall Street firms is firmly in play. What does Wall Street do when they do window dressing? Bottom line, Wall Street is lagging huge year to date on returns on their benchmarks. Those are they're trying to play catch up, which ultimately, folks, will not happen. I'm glad to say clients of Rezny Wealth have had an exceptional 2025, and we look for greener pastures as we go into 26, 27, and 28. More fuel for stocks, by the way. Fed Governor Chris Waller and San Francisco Fed President Mary Daly both sounded very dovish again. The odds of an interest rate decrease December 10th have gone up to about 88%. This is good. Rates are coming down, as I've discussed earlier in the year, and I expect at least 3 more rate cuts in 2026. But not everything is rosy out there. We're starting to see real cracks in the leveraged loan market. Prices have fallen 6 days in a row, and investors have been net sellers of these type of leveraged loan funds in the last 5 or 6 weeks. Margin calls could get real ugly real fast for investors who are invested in these type of products. This brings me to a topic I really want to highlight today. It's called private credit. Wall Street absolutely loves pushing private credit funds on their unsuspecting clients. Why is that? Wall Street manufactures investments. In our opinion, most are garbage. They have lockups, they have high fees and expenses, and they have high commissions. It's great for the Wall Street firms, the banks, the insurance companies, and their commissioned salespeople, but it's not good for the client. But the truth is, Rezny Wealth Management has never put a single client dollar into private credit, and we never will. I'm just trying to highlight to you, the investor, why we do our due diligence and why we buy only liquid investments that we can thoroughly vet and analyze so that we can build quality portfolios for all of Rezny Wealth Management clients. So basically, why do we hate private credit? Almost zero liquidity, sky-high fees, and enormous risk, which is what we're starting to see today. Many of the funds have lockup periods for 8 to 10 years with no ability for these investors to get out when things go south. Again, this is not good for the investor, but it's great for Wall Street's pocketbook. When defaults rise, and they always do, investors are slow to move, and they can lose up to 50+% of their capital. They could lose it all, and we're starting to see some of those cracks in the foundation. Please remember, if somebody is promising you big, juicy 5 or 10% yields in today's world, there's a reason. High advertised returns equals high hidden risk. Never buy into the hype. Make sure you always understand how you're invested and the risks involved in portfolios. Blue Owl Capital just had a big redemption freeze. Investors lost 20%. Tricolor Auto, prime sublender, bankruptcy, investors are wiped out. First Brands auto part default on some of their loans, 40% plus losses. These are just in 2025 on these private credit funds. Now you realize why we don't invest in private credit and why we will never invest in private credit. We'll keep you focused on liquid, transparent, low-cost strategies that let you sleep at night, even when leveraged loans and private credit start to blow up. Managing money for over 35 years has taught me an important lesson. Never listen to Wall Street. The bottom line is Wall Street gets it wrong almost all the time, and the advice from Wall Street is conflicted and expensive. Their goals are far different than yours. If your friends and family are not receiving this kind of quality money management without the conflicts of Wall Street firms, we always appreciate your referrals. It helps our business grow. Keep us in mind. Always reach out to us with any questions that you do have. And remember, volatility is normal and expected. We look forward to great investment opportunities going into 2026 for our clients. Again, keep us in mind when you're talking to family and friends. We always appreciate those referrals, and make sure you forward any of our educational videos to your family and friends so they can get the same high quality education information you're receiving. Have a safe and profitable day. Brian out.